Let's talk about rebalancing. Now, it's really important to have a rebalancing rule for your portfolio, whether it's something managed by us here or your portfolio that you're managing yourself. We have rebalancing rules in place. They do differ from the norm. Out there, you'll see a lot of people who have quarterly rebalancing. So they'll have a set asset allocation that they want to have their portfolio exposed to, and then once a quarter they'll rebalance back to that. Now here that's like a time-based rebalance. We use more of a weighting-based rebalance. So I'm just going to jump across here to our Jupiter page. I'm going to scroll on down. You'll see our asset allocation here. Now, what I mean by a weightings-based or percentage-based rebalance, we essentially break these asset classes down into two categories: defensive and growth assets. So our growth assets here are our 50% international equities exposure and our 40% Australian equities exposure. Our defensive is our fixed interest and our cash. So that's a 90-10 split in this particular portfolio. So what we're doing here is looking at this portfolio from the perspective of growth and defensive assets. So this is our fixed asset allocation. Of course, our real portfolios, our real clients' accounts are floating. So what we're monitoring for is how far they drift from that 90-10 exposure. And so we have a hard and fast rules in place of a 10% drift. It gets brought back to this fixed asset allocation. So the reason why we've chosen to do it that way rather than on a quarterly basis is because we don't want to be locking in tax events on a quarterly basis, and we don't want to be locking in and charging our clients brokerage. So every time we transact, it's $4.40 per transaction, or 0.044% of the transacted value, whichever is greater of the two. And the reason why that charge is there is because we are managing this portfolio on your behalf on a HIN. So you are the full legal owner and we're transacting directly on the ASX. There's no custodian in between. So we're very mindful of those brokerage costs. And so we want to get that long-term passive exposure to the asset classes that we're tracking here. And so we want to let compounding and we want to get those dividends, etc., coming in from these the ETFs that we hold here. So we do not want to interrupt that compounding. So that's the time. So think about when we would transact. When the market drops dramatically, for instance, naturally that defensive asset classes, they're going to become a bigger percentage of our portfolio. And so we're going to be out of weight with that 90-10 split. And we're going to have to take those defensive assets and buy more of our growth assets. And we're going to be buying those equities when they're cheap. And when maybe you might not want to be looking at the market, it's a fantastic time for us to be in there actually buying. The other time that we are transacting for you on your behalf as a Rask Invest investor is when you add cash to your account. So when you add cash to your account, naturally your cash balance is going to increase as a percentage of your portfolio. Once that exceeds 5%, the cash balance of the model weighting of 5% or more, we're going to have to bring that in line for you. So that's going to trigger transactions. You'll be able to see all your transactions across here on the transactions tab. You can see here my account. This is the account that I have here for my son in our Luna portfolio. I added two larger sums to start off with, and then I've been dollar cost averaging as I go. That's triggered transactions. If you want to see the rules that trigger the transactions, I'll include a link to our help center below that shows you our trading rules for your account. So whenever you add cash, we will be looking to bring your account into line with the model if the cash balance has grown to an excessive amount. So yeah, check out the help center, book a call with myself as well. Happy to help out and break this down for you. Cheers.